Let's continue the conversation about China's markets and its economy. Here at Post 9, CraneShares CIO Brendan Ahern and former head of the IMF's China division, Prasad, now a senior professor at Cornell University. Gentlemen, thanks to you both. Brendan, I'll start with you. You're here at Post 9. Thank you for coming down.
Yeah.
You run China ETFs. One would expect you'd have to be positive. What do you say to those who point to the economy, see it slowing, consumer under pressure, real estate clearly, entrepreneurs still feeling somewhat attacked by the government? What's positive about that?
Well, those are all the known knowns, right? And so all this negativity, I think, really is baked into the stocks. A lot of investors have vacated the space. And therefore, if we just have some incremental small positives, couldn't that draw some of these investors back in? So we are constructive. At the same time, we want to see more significant policy measures implemented by the Chinese government. They're doing little things around the edges on real estate, on domestic consumption. But just as we saw today, where you had a lot of market reforms, market opened up 5% and faded, it just shows the level of skepticism. People want to see real meaningful change, and I think policymakers seem to be attuned to that.
Yeah, well, I'll come to you in terms of policymakers, because there is this hope, I guess, that there will be something done to really stimulate consumer spending. And yet many of the academics that you read say that's not likely, that she is simply against that. Where do you come down?
It's possible, in fact, that we will see some stimulus. Some monetary stimulus has already been put in place, but those are very modest interest rate cuts. We haven't seen much in the way of fiscal stimulus. But I think the real issue is not about stimulus at this stage. It's about what we just spoke about, how to reinstill confidence in the private sector. Private investment has essentially collapsed over the last year. Household consumption is very weak. And that's because there isn't a clear sense of policy direction from the government. And the crackdown on the private sector in 2021 and 2022 has really dented private sector confidence. So what's really key is not just to get words from Beijing, but actions to show that they are willing to support private enterprises, which they really need for both domestic innovation, productivity growth, and in addition, employment growth. But they need to send that message in a way that it really resonates with the private sector. So far, we've seen words, no real actions.
You talk about the cognitive dissonance, I think, in a recent note between the government and entrepreneurs. What's going to bridge that divide, then, in your opinion, Iswar?
So we saw very significant crackdowns on the tech sector, the medical sector, and many other parts of the economy at the private enterprises. Now, what Beijing has said that it wants the private enterprise to play an important role, but this is going to mean that they provide financing and encourage the banking system to start making loans to small and medium enterprises, which are very important for both productivity and employment growth. But in addition, if you want innovation, that's been coming from the larger private enterprises. So for Beijing to send the signal that, in fact, it is willing to not just tolerate, but to encourage private enterprises and will not try to cut them down to size if they grow larger, if they are more successful, that I think is the real message. And so far, entrepreneurs don't seem to be getting that message. What they're getting is a sense that Beijing still favors the state enterprise sector and will only pay lip service to the private sector. That needs to change.